Good weekend, all. Ira Epstein with your Friday edition. This is your weekend edition of your financial markets. We're going to look at the weekly charts for this Friday, July 18th. 2025. Now remember, I will be gone for a little bit here. I do intend on putting out updates, not quite certain how they'll work out. We worked on all our computers today. It should go pretty smooth. I just won't be in them, which is probably a blessing. I hope you like my new, let me show you this one. There you go. My new t-shirts. All right, I've got all kinds of crazy ones, but I'm enjoying wearing them. It's summertime. I will go back to being more formal eventually. Let's take a look first at the events happening. You're going to have the Conference Board on Monday with their June leading coincident lagging economic indicators, and that'll come out around 9 in the morning. We saw them decline, last report, a tenth from April, so that would have been the May readings. And they expect the June index to even be worse, down 0.2. We'll see if that does come out like that. Japan's upper house election takes place on Sunday, so the big question is, will the prime minister be able to keep control? And if he does, then he'll immediately go into negotiations, trying to reduce the 25% tax, the tariffs that he's getting, and so on and so forth. We'll see how that all goes. Baker used the rig count, up 7. That's why I'm putting this here. It's very unusual. We've been losing them. So for the year, we're down about 42 rigs from where we were. And corporate earnings, you're going to get a lot of them this week. 20% of the S&P 500, so it's 100 companies, are going to report this week, as you can see. And that's big. You're going to get IBM, Alphabet, Chipotle. There's a big amount of names here. And as we just saw with Netflix, which was down today rather sizably in dollars, not in percentage points, even if you hit your numbers in some of these, you get these PEs that are a bit out of whack for some traders. They take profit. Now we'll see if the rebound happens or not. But what we want to talk about here is what the stock market did. And it was a down day in all the indices, as you could see. Market pulled back a little. Gold was up. Silver was up. Copper took off to the upside. And finally, platinum paying attention to the upper Bollinger Band resistance. Dollar index lost, but it came roaring back off the lows, which was impressive. Energy markets were basically down for the day. You can see the bonds and notes gained a little bit back today. And in the grain market, short covering taking place, maybe some bottom picking, but I'm not convinced there's a turn of trend here at all. I think rallies in the grains are meant to be sold overall. We'll see if I'm right on that. So if we could, let's go to the first chart. And what we're going to look at is the S&P 500 index. And as you can see, this market has stayed since 2023 over the 18-month, and that's a monthly chart, moving average of closes. That is powerful. That's how strong this bull market is. I'm watching analysts on TV talking about the market is now in the thralls of another 1 to 3 year run to the upside. That's how bullish some people are getting off this. What they're looking at is the economy strong now. They do believe that the Fed, those people, will cut interest rates, not dramatically. I still think it's a conservative 1 to 2 cuts at best. I haven't joined into any camp yet. So far, if you were to ask me right now, I'd say no cuts. So I want to see where the weakening shows up. If it's data-dependent Fed, there's no reason to cut right here. So we'll see what that happens. New highs for the S&P when you come to the weekly area chart of closes. So you're looking at an all-time high close in the S&P 500. For the week, it feels like the week was down, doesn't it? But it wasn't. You were up a 0.5 percentage point in the week. You can see how the market, and I'm going to say this again, this could be an inverted head and shoulders. Some traders will call it that. And they flip this over from this neck here. So you're going roughly from 6,100 to 40, let's call it 48, just add 13 points. That's going to take you up in the market rather neatly from this point right here. That could be over the 7,000 level on some people that use that type of count. When you take a look at the swing line, the study is consisting of higher lows, higher highs. Now you had an outside week up. You close near the high. What you don't want to see early on is taking out this week's low. If that occurs, it could be a sign that the market does indeed want to roll back. Not taking that out, The market's still got a clean shot to even higher prices. Look at all the moving averages. Everything's under you. And the next resistance points, if you go to the Bollinger Band, and it's in what we call one of these vertical streaks now to the upside. It's got the power from this. It could be 6,500 plus. When you take a look at the slow stochastic embedded, so until that's lost on a weekly basis, this market's in a neat uptrend and hasn't given up any sign that that's over. It is fascinating when you look at the Dow and you go on the weekly chart to the all-time high and you see the market came right up to it and it backed off from there. But you've developed in that process the bullish embedded reading. Clear that and it's free sailing to the upside. You've always got to keep your eye on the Bollinger Band. This market will be hampered by that because unlike the S&P, that's a close resistance point. In the NASDAQ, this is more similar to the S&P, the higher lows, higher highs, the embedded reading. Next stopping spot, if it wants to go to the upper Bollinger Band, 24,138. When you come to the Russell, just like the Dow, you didn't get up to the highs, and this is the weakest of the indices. As much as traders love to buy these stocks that haven't made a move yet, you've always got to be careful with them. And you can see it's not as strong as the other indices where you're either at the highs or making new highs. In the DAX, we had that pullback. You've kept the embedded reading. Now, if you can clear, not this week, but the prior week's high, you open the door for whatever the Bollinger Band is to get back up there. In the bond market, you have no trend at work. You have a higher high, you see that with the arrow there, lower and low, and an oversold market. Don't know what to tell you on that. In the 10-year notes, you have the swing line up. The market has fallen into the support at the 18 and the 100-day average. The settlement for the week at the 110.25 is underneath the 18-day average, so the bias is down. Difficult chart so far to get any feel for. The dollar index is, what is this? Is this no more than a bounce in a bear market? And on the weekly chart, you can't tell. You lost the bearish embedded reading. You got a settlement over 21. If the market wants to rally from here, then the 9,900 level or wherever that 18-week average when we reopen Sunday night comes in at, that will be the next target. If the market regains, and that's the only time you can regain the lost embedded reading is the week after you've lost it. So it could regain itself early next week by breaking down. That would be a sign that this was a bear market rally. If you get more of a rally early on in the week, be careful. This market could be screaming the way that it did on the daily chart that maybe we're through on the break. You're at a funny spot in this right now. In the eurocurrency, you're pulling back a little bit, as you could see. For the week, you were down 0.25%. The trend is up, the bias is up, but you're on the verge. You haven't done it of losing the embedded reading. You haven't done it. So it's not helping me with the dollar. Normally, if this had lost its reading, I could tell you, hey, we're coming down, the dollar's going up. If this market gets a bid and starts moving up, I'm still caught with what is the dollar at this point. In the Canadian dollar, you've lost the bullish embedded reading, with a reading this time under 79. But the target's right here. It's the 100-day average. For gravy, maybe you can go to the red line, the 18-week average of closes. But that's all that I'm seeing. And you have the bias still up. But a pullback could be in the card. So if the dollar's going to rally, this probably gives you a pullback. In the Japanese yen, why get involved with their election? The way that goes is going to determine what the yen does Sunday night, in my opinion. In Bitcoin, up and away, you've got the bills the president is signing. The asset managers will look at these bills and be plowing more money in. All of the cryptos together are now a $4 trillion market. It's not something, oh, I don't believe in it. It's there. It's a business. It's an asset class. Go look up and Google for yourself the difference between a stable coin and a cryptocurrency. Just do it and get an understanding of what it is, because you're going to walk away from it going, there isn't much difference. You're right. It's what they peg to, but I don't know that that matters. When I look at the differential between Brent and WTI, you're into the $1.94 area. It's been staying like that. And when we take a look at the energies, there's a huge battle going on here at the 6,800 level. If this market clears 66.34, you open the door to get down to about the 60 area one more time here. In WTI, if the market crosses, and I'll show you this right here so you can see it, if you get back underneath 64.5, you open the door up potentially if you're going to go to the lower band down here. There is no uptrend or downtrend in either of those at this time. You are in an uptrend in the gasoline until you take out 205.85, but to buy the 18-day average and risk 700 points makes absolutely no sense to me. So you put this all together, and it's a fun time. It's summertime markets. All right, and normally its sell may go away, and if you did that, you left a lot of money on the table. I think you know that in the stock market. Now the question is what happens as we get through the summer and you start approaching after September, that year-end period where you normally get good rallies in the market. You got to think those things through and get to that. Now, for those of you that use TradingView, I don't know if you're aware of it, but all of my indicators are available to you in TradingView. All you have to do in order to get them, and they're my swing line, right through here, as you can see, it'll plot that, so you don't have to worry about writing code yourself. The moving averages that I use, you'll get all 4 or 5 of them, by the way. The Bollinger Bands, window envelopes, but you got to get my daily numbers in order to use them the way I do. And of course, my formula with slow stochastics. Then I like to outline on a chart what the outside days are, because they're so important. You put it together, this ties together with my courses. You're only using up 2 slots for yourself in this. So how do you sign up? It's simple. Just go to our website, iraepstein.com. And in the top right, you're going to see client resources. So when you get there, client resources, give it a click, and away you go. We'll get an email, we'll turn it on for you, and away you go. Log out, back in, and they're all there. Pretty simple. I'm Ira. You have yourself a great weekend. I'll have a good time on resting up and coming back refreshed, I hope. That is the goal here. Trade well. Take care.